Good day. My name is Kim Moody, and I'm your host for In the Mood with Kim GC Moody podcast. And today, as I record this, it's May the 28th, 2025, and it's been a long time since I've done a podcast, over 2 months ago. Now, I've promised to be more consistent with my podcast, and I'm going to recommit to that. The excuse I have, although it's not a really good excuse for taking over 2 months to do this podcast, since the last one was, it's been a crazy time in Canada, and I've been neck deep in that, and it's been, the election has really kept me quite busy, but we're almost, well, actually it's been a month exactly today, May 28th, since we had the election results. And my wife has said to me that I'm kind of like the Peanuts character Pigpen, if you're old enough to remember, the brilliant Charles Schulz Peanuts characters. And Pigpen is the guy that walks around and is always filthy, and he's got a dust cloud that follows him around. And I've kind of been like that. It's just been so disappointing to me. I wanted to see positive change. We obviously didn't get it. We had the Liberal Party in power with a new leader, but pretty much the same band of characters as I've written about in my Financial Post articles and other newsletters. I'm not very optimistic about this government, but I'll be the first one to admit if it turns out to be if I turn out to be wrong. But I've had to live my own advice in the last little while here to know what you can control and know what you can't. And in this case, obviously, I can't control it. So I think I'm out of that dust cloud now and back to trying to, be a lot more positive and make positive contributions. And, in chatting with a lot of people, there's a lot of disappointed people like me. Obviously, there's more Canadians that voted for this government than not. But having said that, it doesn't mean that this government has a huge mandate, which in my view it doesn't. And so obviously we need to, as Canadians, pay close attention, and hopefully the opposition Conservatives, which is the party that I was hoping would get elected, obviously. For any of you that follow me, you'll know my politics are quite transparent. But they're principled reasons why. It's not simply partisan reasons. But in any event, I'll move on and try to be a lot more positive and ensure that we have some good results. So moving forward, this podcast, I want to talk about a number of things. Moving forward, I want to talk about what this government is doing on the tax and financial side that I can see so far, and frankly, I'm not very impressed. And I'll explain to you why. And then I'm going to talk about some looming tax issues that are coming forward, mainly from the United States, that I think Canadians really need to be attuned to. So kind of a bit of a potpourri of topics today. But, maybe I'll just start off this podcast by saying that, it's pretty obvious that Canadians are divided. And I sure hope, given this new leader that we have, Mark Carney, that he grabs, the old saying, that grabs the bull by the horns and recognizes that Canadians are divided, and recognizes that he doesn't have a big mandate, even though he says that, he says the words that make it seem like he does. He does not have a mandate, majority mandate at least anyhow, to make massive changes in a whole bunch of different areas. But what he does have is the opportunity to try to unite Canadians. And, anytime a country, doesn't even need to be a country, it can be just a small group of people. Anytime there's the opportunity to try to unite those people, you don't necessarily need to have everybody agree with each other. But if you can walk forward in a united way, which is one of the reasons why I think the so-called mushy middle has always worked rather well. If parties and voters strike for the so-called mushy middle, Your party might be a little bit left of center fiscally, left of center socially. My party might be a little bit right of center fiscally and a little bit right of center socially. But together, there's not much difference in the whole scheme of things because they're all in the middle. It's where the extremes have a loud voice and people get attracted to those extremes. That's where the division becomes very, very hard to unify. And so I hope that Mr. Carney recognizes the division, it's real, and he makes genuine efforts to try to heal the division. And if he can do that, then fantastic. He'll go down in history as one of the greatest prime ministers of all time, and I'll be there to cheer him on. Notwithstanding, I don't like a lot of his policies. The bigger issue is unifying Canadians in such a time of division. And yes, there's other countries around the world that are divided as well, but you can only control what you control, as I mentioned already. And so I think, if Mr. Carney can do that, I think that would be fantastic. And because I'm from Calgary, proud Albertan, I'd be remiss if I didn't talk about, the growing Western separation sentiment. And I'll make it very clear, I'm like Danielle Smith, the Premier. I'm a proud Canadian. I don't want to see Alberta separate, but I do recognize the reasons why Western separation sentiment is not in the so-called crazy zone anymore. There was a time in Alberta history, there's always been sentiments of crazy separatists. Going back to the Western Canada concept, the party that was trying to separate in provincial politics. And, if you were a member of the WCC, you were kind of considered crazy. Well, I can tell you today, fast forward over 50 years, talking about or even having expression of sentiments of wanting to separate is not so crazy. And I can tell you, I consider myself rather moderate. Obviously, some people might disagree, but that's how I view myself, rather moderate. I am certainly right of center fiscally, but I do consider myself a moderate socially. I would suggest to you that, I would state to you that I'd be lying if thoughts of Western separation were not floating around in my head. But as I already mentioned, I don't think it's a great idea. But I think you need to give credence to people that these sentiments are not crazy. When you are treated so poorly by your federal government, it would be crazy not to think that those sentiments are not real. And so I think when people, especially Eastern Canadians, say, "Oh, grow up, just separate already," or "What are you complaining about?" Those type of comments are not helpful. They're misinformed, and frankly, they're just low IQ. They're not rooted in history, and they're certainly not empathetic. And so I think the better approach is to look at why are Albertans and other provinces like Saskatchewan, there's certainly people there that are floating with the idea of separation. Why are these issues becoming so mainstream? And I think it doesn't take much of a rocket scientist to figure out that the last 10 years have really sparked that, it's added fuel to that fire with things like Bill C-69, the No Pipeline Law, the emissions cap, which is clearly a way to try to restrict oil and gas, the canceling of and non-approval of pipeline projects. And people that think that, oh, the federal government bought you a pipeline, grow up. If you're talking about Trans Mountain, that again is such a shallow take. I have no time for those kinds of arguments. The private sector would have gladly finished that project if it was financially feasible, and if the circumstances were such that there was certainty on getting it across the goal line. So the government was certainly not the savior with respect to Trans Mountain. So all to say that I'm hopeful that Mr. Carney can be the unifier, can quell the Western separation, because we have a great country. and we really can flourish, but unfortunately we're not at the moment. We're economic laggards, and if we can't unify, then I worry that we'll continue to be economic laggards, and the Western separation sentiment will continue to grow, along with the Quebec separation sentiment, and it'll just pull apart the fabric of our country to a point where perhaps it can't be sewn back together. So fingers crossed that doesn't happen, but there you go. I want to open up this podcast by talking about the importance of unity, and hopefully our new Prime Minister and his cabinet recognizes that. Let's move on to tax and economics. Mr. Carney didn't get off to a great start. He won the election, and then shortly thereafter, appointed a cabinet, and there's a lot of familiar faces there. There are some interesting faces, and certainly the new energy minister appears to be a bit of a breath of fresh air. Let's hope that continues. On the financial side, on the Department of Finance side, we have Mr. Champagne, who was the finance minister before the election is reappointed. But in an interesting move, he's also the new Minister of National Revenue. And historically, those two, which basically is responsible for CRA, historically, those two ministries have been separated because the Department of Finance is responsible for tax policy and tax legislation, and the Minister of National Revenue is responsible for administering and collecting. And so very different roles, and yes, there's overlap in terms of policy and administration. And so one might argue that maybe policy will be streamlined better to the extent that we have the same minister. And I could see that argument, but I also see the counter to that, and so little puzzled by that. So, but in any event, time will tell whether or not that's a good move. So, but Mr. Champagne came out with a statement shortly after his appointment, and basically said that there's going to be no spring budget, and instead there would be a fall economic statement, and that's it. And so that really caught my eye, and thankfully a lot of other Canadians. And there was a bit of an uproar about, what are you talking about, no budget? Because the fall economic statement historically is kind of like a halfway point update in the year. And for those that don't know, the fiscal year end of the government is March 31st, which means that's typically why we have a budget presented in the early spring or late winter. And so early spring typically is early April, and at the latest, we have, I believe off the top of my head, we have seen some early May budgets as well, but typically it's going to be somewhere in the neighborhood of February to April, so as to coincide with the start of the new fiscal year being April 1 to March 31. And so we see that historically. And I wrote about this in a Financial Post piece after Mr. Champagne made his announcement. And basically I said, whoa, what are you talking about, no spring budget? And because that would have been the second time in Canadian history. Now think about that. Canada was born in 1867. And there has been an annual budget presented by the government on a timely basis every year since 1867. We've had World War I from 1914 to 1918. That was a crazy time for the government of Canada, for Canada in general. We had the Great Depression from 1929 to the mid-1930s. We had, which was a horrible time if you've ever studied the Great Depression. We've had World War II, 1939 till 1945. Horrible time, challenging time in Canadian history. We had other things. We had the Korean War, in the 1950s. We had, the fallout from the Cuban Missile Crisis and the Cold War. And then, of course, fast forward to 2020, with lots of history in between there, we had, COVID. and the government was shoveling money out the door like crazy, and more worried about that than presenting a budget. And so we didn't have a budget until 2 years later. And so this was going to be the second time in Canadian history that we were not presented with a budget. And the reasons presented for not having a budget, well, there's three main reasons by the pundits. One, pundits and politicians. One, well, there's just no time. They got elected on April 28th. There's just no time. Bullshit. That's a complete BS argument. A lot of the budget is done by the bureaucrats at the Department of Finance, and they work their butts off to get this done. And even though Parliament was not sitting because it was prorogued since January the 6th, and it was in recess before that for the Christmas break in 2024, the Department of Finance bureaucrats were still in communication with their political masters. And the Liberal Party was still the governing party all the way up until the election call. And when the election call came and they won, a good chunk of the budget, I would guess, had already been done. And yes, there's different priorities politically, but you can still present a budget. So that whole number one time thing is BS. And anybody that subscribes to that, in my view, I'm happy to debate them. Number two, well, we've got threats from the United States on tariffs and other issues. So the budget, even if we did present it, is not worth the paper it's written on because it would change. And the same thing goes for our NATO spending commitments, which is number three. We don't know what that NATO spending commitment is going to be. Is it going to be 2% or 3% or 4 or 5%? Which 5% would be unrealistic, obviously. But we don't know. And therefore, that could throw the budget offside completely. Again, number two and number three, total bullshit. I was the CEO of my firm, which is obviously a lot smaller than the Government of Canada's budget. But there was no shortage of issues and events and unforeseen things that were thrown my way that threw the budget off. But did that give me an excuse not to present a budget and present it to my partners? Absolutely not. Because a budget is a roadmap and a plan. And yes, that's why you have flexible budgeting, is to provide for changes. So there's always contingencies built within the budget. And the Government of Canada does lots of contingency planning. And so there's one particular person who I'll keep nameless, who has had a lot of press time saying, well, it's not worth the paper it's written on, so you got to give the government some slack for not presenting a budget. Total garbage. Frankly, I have no time for people like that, because that shows a lack of naivety. Try that again. That's bad English. It shows naivety to the extreme. And would I want a person like that running my business, or certainly running my country? Absolutely not. And so, the fact that media gives people like that airtime is frustrating. And frankly, that people buy it. Some Canadians buy it. A budget is about transparency and accountability and having a plan. And Mr. Carney, was all about a plan during the election period. But to have no budget presented in the spring, in my view, is quasi-unforgivable. Now, he did come out, Mr. Carney, with a statement when he was in Italy attending Pope Francis's funeral, saying that there would be a full and comprehensive plan presented in the fall. Well, so the media jumped all over that and said, well, that means that there's going to be a budget in the fall. Well, if you watch his press conference carefully, and I haven't seen anything from the Department of Finance in writing since that time, but I'm happy to be wrong. If there's something out there, hopefully a listener can let me know. But the bottom line is there's been, a full and comprehensive plan doesn't necessarily mean a budget. I hope it does, but I don't know. So I'm a little bit skeptical, but I'll give them the benefit of the doubt that a full budget will be presented in the fall, so that ultimately we don't have the second time in Canadian history not having a full budget. But I'm still a little upset that we don't have a spring budget, because by then 6 months or 7 months or 8 months will have been gone with no accountability for spending during the period from April 1st, 2025 to whenever the budget is presented in the fall. Let's say the fall is at the very latest by the end of December 21st. And so when politicians or bureaucrats use that language, fall, spring, winter, that gives them a lot of leeway. And so my expectation is we'll see, hopefully, fingers crossed, a full budget presented probably sometime in late November, early December. So that's a long time. So I'm disappointed by that, and I'll keep... Now, the other thing I'm a little bit upset by is Mr. Carney appears to have doubled down on two things. And in the throne speech that was released yesterday, these phrases come up. And the two phrases that, kind of upset me are spend less to invest more. And two is the separation of the operating budget from the capital budget. Let's talk about spend less to invest more. If you have a great answer to what that means off the top when you hear that, then great. Otherwise, frankly, it's just a word salad. Spend less to invest more? Well, I'm sure what he's talking about is, hey, let's not spend money on things that have no tangible value, and instead let's spend money as a government on things that have enduring value. I'm sure that's what he means, which sounds very good, right? Well, how do you account for that? Well, again, it goes back to a budget and accountability. Yes, if you're going to invest in highways and national energy projects, and fantastic. But at the end of the day, how are you going to pay for it? Are you going to pay for that by just simply reducing your day-to-day expenses? Not a chance. Absolutely not a chance. Because some of these bigger projects will dwarf the savings on the operating side. And so my frustration with the vacuousness of that phrase, spend less to invest more, is that it's a signal that the deficits are going to be increasing, or could increase, I guess, is a better prediction. And at the bottom line is these cost reductions that are proposed, which I'm always good for cost reductions, by the way, don't get me wrong. But it really depends on what invest more means. Because from a government perspective, you've got one source, generally, of funds from taxpayers. And it can those taxpayers can pay either corporate tax, personal tax, GST, other sources of taxes and levies. But at the end of the day, it's all coming from taxpayers. And so whether you spend less of the taxpayers' money to invest more, it's still coming from the pocket of the taxpayers. Which leads me to the challenge that I have with the separation of the the operating budget from the capital budget. I wrote about this in the Financial Post when he first mentioned it during his leadership. Mr. Carney mentioned it during his Liberal leadership run. And so this is, it's an old accounting trick that governments historically, and this goes back a long, long time, so he is by no means brilliant when it comes to this idea. And frankly, recently, Alison Redford, the failed premier of Alberta from the roughly 2013, I think it was, 14, tried this trick and got absolutely roasted for it. Because at the end of the day, going back to my premise, you've got governments have one source of funds, it's from taxpayers. And whether you spend those funds on day-to-day operating expenses or capital, projects that have long-term enduring benefit, at the end of the day, the funds are still coming from the taxpayer. And if those funds are not enough, which in most cases it's not, then there's only one other way you get funds, and it's by debt. Governments are not like some businesses where they can go to the markets and raise capital by selling securities, for example. At the end of the day, if there's not enough money coming in from taxpayers, then debt increases. And so whether or not you separate the operating budget from the capital budget, don't get me wrong, that's useful information. I'd like to see what the day-to-day operations cost and what the long-term benefits are in so-called investments. But it's the ultimate deficit overall that really matters with government, because as you increase debt, then that comes with increased carrying costs. And just as a takeaway here on this, the debt that Canada has comes with carrying costs, and it's projected that our debt carrying costs, interest, for example, on the debt, will cost $70 billion, and I'm rounding up here, in the next fiscal year. Does it fit next fiscal year? It might be the following year. I stand to be correct on that, but it's in that neighborhood. And so think about that. That's a big number for a small country like Canada. If you're thinking about that number, rounding up to 70 billion, how much do we collect as in GST? How much does the government of Canada collect in GST, net of rebates and what have you? Well, it's about $52 billion, roughly. So in other words, we're spending more on public debt charges than we are collecting on GST. How much do we collect in corporate tax? Well, that's about $82 billion. So our public debt charges are approaching the amount that we collect in corporate tax. I could go on and on. But the point being is whether you separate the operating budget from the capital budget, it doesn't matter. And yes, maybe we have that transparency as a separate document. But really, at the end of the day, what's important is how much debt is continuing to be accumulated, because that drives impact, long-term impact, that is hard to get out of. We cannot have our interest on our debt continuing to get out of control, accounting tricks aside. So that to me is something that we really do need to get a handle on. So don't get tricked and fooled by Mr. Carney's appearance as being a real smart economist, and he's going to separate the accounting budget, the budget into operating and capital. That's simply an accounting trick designed to be deceptive so as to mask overall spending. Not a good look. And so with that, are we going to see tax reform? The short answer is no. Although at the end of the election period, days before the election period, there was something that showed up in the Liberal Party platform that said they wanted to convene a corporate tax expert review. I have no idea what that means. And does that mean that they're going to convene like a mini tax reform panel that looks at our corporate tax system? And if so, number one, who are those so-called experts? Because the experts that the Liberal Party has used historically are frankly just left-wing academics with very little practical experience. And a lot of them come with ideological agendas. And so that if that's the so-called experts, then not good for the country of Canada. We need a much broader expert. But the real point is, why only corporate tax? Corporate tax, as I already mentioned a few minutes ago, we collect $82 billion as a country. But what I didn't say is how much we collect in revenues overall. And as of 2024, March 2024, the number off the top of my head was $459.5 billion, something like that. And so in corporate tax, we collected $82.5 billion. So that's that's about 17%, if I'm doing math correct off the top of my head. Whereas personal tax revenues was about 217 billion out of the 459. So way overweight on personal tax revenues compared to corporate. So what I said in one of my Financial Post pieces is, it's fine to do a tax review period. And if you want to focus on corporate tax, sure. But you're missing the opportunity for the bigger picture, because corporate tax, number one, is a small percentage of the bigger pie. And two, for those who know exactly how corporate tax works, it's simply a deferral. In other words, ultimately, when the profits are distributed to the shareholders of a corporation, there's going to be personal tax paid. And so to just look at corporations and not look at the overall bigger picture, to me is a lost opportunity. And so hopefully the Liberals rethink this silly plan. But if they don't, at the very minimum, I hope that their panel that they pick is going to be a broad-based panel full of economists that are not just left-wing academics, and tax people, tax practitioners, charitable sectors, some nonprofits, etc. Because Canada does need overall tax reform. Our system is antiquated. I've written about this forever. I've been a mouthpiece on the need for tax reform for a lot of years. So with that, one last thing I just wanted to quickly talk about was the threats coming from the United States. And I'll just focus on the United States. There's other areas where there's some threats, but because the United States is the biggest gorilla in the room, of course, the headlines in the media have been dominated by tariffs. And, to a certain extent, rightly so, because has the potential to be devastating. But as I wrote about in the Financial Post, and I've been on my pulpit for a lot of years on this, the United States, all they need to do is sneeze, and Canada has a cold. And when it comes to tax and tax competition, we got to be competitive with our gorilla neighbor. It doesn't mean we need to match them, because our country is unique and different than the United States. But we've got to be at least competitive. And we have been out of step competitive-wise on the personal side for many, many years, ever since this Liberal government came into power and jacked up personal tax rates as one of their first measures in 2016. That threw us way off. And we've been paying the price on that ever since, and we continue to. But recently, the United States released this so-called Big Beautiful Bill, and buried in there was a section called Section 899. And if it gets passed by the U.S. Senate, because it's already passed the House of Representatives, the devastation to Canada would be material, very material. As I write about in the Financial Post in my article that I released earlier this week, Canada would need to be first designated as what I call a bad country. And a bad country is one that has tax positions that are detrimental to Americans. And really what the United States is going after is the imposition of digital services tax, which both the Biden administration and the Trump administration, version 1 and now version 2, have not been fans of digital services tax because they believe it unfairly targets American technology companies. And I think there's a good argument for that. But notwithstanding that, we had countries like France impose a digital services tax during Trump's first tenure, and he went after France, and then they dropped it. And now we've had other countries that have imposed digital service taxes, including Canada. And Canada imposed one last year in 2024. The United States is also not happy with the imposition of global minimum tax top-ups, which is a very complex topic that I won't get into, but suffice it to say that it gives countries the power to tax large multinationals who pay a corporate tax that's less than overall 15%. It's very extraterritorial in the minds of the United States, which I tend to agree with them, and has significant overreach, which has been expressed by the United States. Both the Biden administration, which originally was sympathetic to a global minimum tax top-up, but then kind of got cold feet from the looks of it and never imposed legislation to counter it. Well, now Trump's administration is imposing a retaliatory measure that, to the extent countries are bad countries, and in Canada's case, they've imposed both the digital services tax and this global minimum tax top-up. And so Canada would clearly be in the crosshairs. And if they get designated as a bad country, then any passive income received by a retail Canadian, retail investor Canadian, for example, individual, or tax-exempt pension funds would be subject to a higher U.S. withholding tax. And I won't get into all the mechanics of it, but let's just say that the tax rate could be 30% or higher, the withholding tax. For dividends and interest and capital gains could, depending on what you're disposing of for real estate, for example, could be high as well. And tax-exempt pension funds like the Canada Pension Plan would be subject to withholding as well, which right now they have treaty protection and it's zero, as you would expect. And so, do I think this is going to get passed by the U.S. Senate? I have no clue. But if it does, I think a version of the bill will likely get passed. And if Section 899 is part of that version that gets passed, and if the United States takes the next step and designates Canada as a bad country, then it could be bad news for Canada. My observation, though, is that it would be too chaotic. And so my sense is that this is a negotiating tactic, which is going to encourage countries like Canada to come to the table and avoid that chaos. So we'll see what happens, but the big beautiful bill did not contain any corporate tax rate reductions, which Trump has promised, and that would be another tax competition issue that Canada would face, which really could be problematic. One thing that that big beautiful bill did contain was a proposal to not tax tips, which is, in my view, very, very silly. It has the potential to be out of control. Like, how are you going to track that? And is it going to spread to other types of businesses? Yes, they're trying to contain it to hospitality where it's traditional. But man, I can just see, I can see it having the potential to really spiral out of control quickly. And so I'm a little bit surprised that that's in the bill. So I think that's kind of it for today. A bit of a potpourri, a long one, already at 38 minutes here. So hopefully you hung in there. But I really would encourage you to continue to subscribe to my content. What I call the In the Mood Network, which if you subscribe to my mailing list, the network in other words, you'll get content like podcasts and my newsletters and webinars and what have you. Because whether it's through consulting or coaching or speaking or writing, my work is all about planting acorns. I love this analogy of planting acorns because if you know what an acorn is, you'll know that when you plant it, it grows into the mighty oak tree. And the oak tree is one of the strongest and long-lasting trees known to man, or to the world for that matter. And I love that because oaks can live for hundreds of years. And then when they die, their wood can be harvested and used for hundreds more years. And so my work is about planting acorns, and it's about deliberate, principled actions that challenge the status quo and grow into something bigger, like that mighty oak tree. And what's my goal? Well, bold reform, stronger foundations, and a country that values hard work and common sense, which unfortunately common sense doesn't seem to be so common these days. But with that, I want to thank you, and thank you for supporting me. If you like this podcast, please share it and like and subscribe, and it does make a difference. So thanks very much. All the best. Bye now.